Is this the most important finance and money related video you're going to watch this year? I honestly really think so. And give me 10 minutes of your time because I guarantee you, you will not regret it. My name's Dom Trimboli, Managing Director of Refinancer. And this video highlights the best deal at the moment to refinance your home. And honestly, it might even be the best refinance deal in the history of refinancing deals. So we've been advertising this lender, telling everyone about this deal, and it's not easy to understand, and there needs to be some context behind it. And that's what I'm going to do here. I'm going to help you guys understand it, because if you truly are motivated by saving and money and doing the best finance related kind of deal for your family, this is it. There's no ifs or buts. There's nothing else. It's just this, and you need to understand why. So at least if you say no to it, you're understanding the ramifications. So the deal was with the Bank of China, possibly the greatest value refinance deal we've ever seen. Let's make sense of this, okay? Now, what is the cash rate at the moment? It is 4.1%, okay? So think of the cash rate as what the banks buy the money for. So the banks are buying the money for 4.1%. Now, Bank of China's rate is 5.58%. So effectively, they're buying the money for 4.1, they're selling it to you at 5.58, and they're making a margin of 1.48%. And the banks need to obviously make a margin. They're banks, they're trying to make money. They're not your friends. They're not looking after you. They're not running a charity. Understand that, because that's just how it is, okay? Now, the cashback this bank is giving is $4,288. That's right, over $4,000. That is a ridiculous cashback. It's pretty much the most we've ever seen, and you can get it off a loan of 250,000. If you have a loan of 250K, they pretty much just give you that when you refinance. That is unheard of. So what does this mean, and why is this so good? Because 5.58, that's way higher than it was a couple of years back. Sure, but you need to understand what that actually means. Now, this is the best deal that there ever was in terms of what the rate you're getting in the cashback was, right? But it was at a different time. This is at the time where the market was at its lowest point. So let's understand what that deal was. Now, the cash rate was 0.1%. It was next to nothing. That's 4% higher than what it is now. So actually, sorry, this needs to be ANZ. So ANZ were doing 1.89, right? So what that means is they are buying the money they were buying the money at 0.1 and selling it at 1.89. So their margin was 1.79%. So yes, that rate is way lower than it is now. But guess what? The margin is lower the margin was higher back then. They were making more money then, even though the rates were lower. Bank of China's margin is 0.31% lower. That is ridiculous. Absolutely ridiculous. 0.31% lower margin. Now, the cashback, it was a fantastic deal, don't get me wrong. $4,000 cashback. Bank of China is still $288 better. So this was the best deal we've ever seen, in any market, right? But if you bring it into today's market, Bank of China is still better. And it's not just better. It's better the cashback is just better, but the margin on the interest rate is massive. Absolutely massive. 0.31%. To give you context, on $1 million loan is, $3,100 a year. That is not, or even on a small loan, 500K, that's still $1,600 a year. It's a massive difference. So this deal here, it depends on how you look at it, but it is greater than the best deal we've ever seen. And it's available right now. So what else is going on? What's happening with the second best deal? And the second best deal is with St. George. So again, the cash rate's 4.1 as it is now. The St. George rate's about 5.84%. They're giving you a $2,000 cash back. How does that compare with Bank of China? So Bank of China's margin is still 0.26% lower, right? In fact, their margin now, St. George, is lower than ANZ's was at that time, if not pretty similar. But Bank of China wins out by 0.26%, and the cashback is where things get crazy. They win here by $2,288. Now, that is significant numbers, materially significant numbers. And if this isn't making sense to you, you might be thinking, all right, big deal, Dom. I need to know what this actually saves me over 2 years on my current rate of maybe about 6%, because that's probably what you're on if you haven't looked at your mortgage, give or take, right? So if you've got a loan of $250,000 over 2 years, just in interest, the Bank of China saves you $2,100, right? But if you factor in the cashback, which you have to because it's all money, this still saves you $6,388 over 2 years on a $250,000 loan. If it's a $500,000 loan, saves you $8,488. And for those who have the larger loans of $1 million, let's say, saves you $12,688. Even if you had a loan of $750,000, that's still going to be around 10 grand. So we've established this deal, even at the lowest entry-level loan amount, is going to save you $6,388 over 2 years. Is this a lot of money to you? What can that money do for you? Like, it is absolutely significant. And if you're still thinking, oh, big deal, again, Dom, the second best refinance deal, it's still good at 5.84. Who needs the Bank of China? All right, let's have a look at that. This is the difference between this St. George deal that you can get or the Bank of China deal. So if you are going to refinance between deal number 1 and 2, what are the differences? And the numbers just speak for themselves. On a $250K loan, you're going to save an extra $5,538 over 2 years gone with Bank of China over St. George. The number 1 deal saves you that much more than the number 2. And as the loan gets higher, the savings, of course, get higher. 500,000, deal 1 saves you an extra $6,700 over deal 2. Deal 1 over deal 2 at $1 million, almost 10 grand. So if you've established if you were on the fence about refinancing, this is what it is. If you're thinking about refinancing with the second best option, well, guess what? The first best option saves you an extra, 5 to 9 grand, depending on your loan amount. It is like, if these numbers are not getting through to you, like they absolutely need to. Inflation is off the charts. Things are expensive. The time for penny pinching and looking at reducing your expenses is now. And this deal here is, the numbers just speak for themselves. So if you're following and you understand these numbers, you're probably thinking, all right, it's too good to be true. So what's the catch? And you know what? There is always a catch. Like, that's just how it is in life. If something is way better than the next thing, there's got to be a catch to it. Like, this isn't a scam or anything like that. It's just the reality of how the world works. If there's a great deal, there has to be something a little bit negative that goes with it. And there is, and that's us being completely transparent. Now the negatives, the turnaround times are 6 to 8 weeks here. A normal refinance will take you 4 weeks. This will take you twice as long. Does this mean it's still worth it to wait an extra month to refinance? Absolutely, it does. When you look at these numbers, you can wait another month to save this much extra versus deal number 1 to 2. The application process may require an extra 30 minutes to 1 hour of your time. Now, what does this mean? Look, the Bank of China, they may come back and ask for something that we can't predict. This is a bank entering an Australian market. We're experts at what we do. We've had lots of applications with them, but we need to understand we're dealing with someone that's entering, so we can't predict everything. When we're dealing with the major banks, we can predict everything. If something pops up that we haven't, told you about, I'm talking 1 in 100. Bank of China could be a coin flip. You may give us all your documents, and then they're going to come back, hey, we need an employment contract. And if you're down with this deal, you've got to be okay with that potential of just that little bit of extra work, right? Another negative, only 1 major branch in the CBDs. Now, this, for me, it's not even really a negative because, number 1, who really goes into a bank? You can just call up or do everything online. And number 2, most banks don't really have, the branches are closing. This is the way it's going. If you're dealing with banks like ING, Citibank, they don't really have branches. Macquarie, they don't really have a lot of branches. So it's on par. Online banking, it's not going to be NetBank with CBA. It's going to be pretty basic. It'll do everything you want to do, offset, redraw, extra payments, everything basic you want to do, this will be fine. But if you want to, like NetBank, undisputed king of online banking, but CBA, you pay for that quality. And when it comes to paying for that quality, we think it's not worth the extra cost at this point in time. And again, if you want to call them up once a week to chop and change, look, it's just not for you. if you're one of those people that need to make all these changes, like you need that level of service, you want to call up and just have an amazing experience, like you want to feel like you're in a 5-star hotel, this isn't it. Like, Commonwealth Bank will do that for you, but again, you're going to pay for it. You can call us up at any time and we will help you. But when it comes to your online banking stuff, we're limited in what we can do. You can still call up someone from the Bank of China. They're still going to help. It's going to be fantastic. But just, you need to understand that these are the little sacrifices you're making to save this much extra here. And if these numbers weren't massive, then these sacrifices might be material or significant to your approach in refinancing. But the reality of it is, these are very small inconveniences and these are major, major savings. And that is the trade-off. And you need to understand that, because, you know, that is the big part of this deal. Now, some more facts to help you make sense of this deal. Bank of China, who are they? I haven't heard of them. Well, guess what? They're the 4th biggest bank in the entire world, right? Massive in China, obviously. China's got a massive population. So, you know, it's not like you're dealing with some startup who's just come out. Man, these guys are established. They're the 4th biggest lender in the world. They're actually 4 times larger than CBA. The bank that I've been referring to as the pinnacle of quality, service, and everything, they're 4 times bigger than that. We got to understand the reason why this deal is so good is because of the bank has scale. Think of, let's say you want to get some hardware and you've got a corner shop, a mum and pop hardware store, or you've got Bunnings. What's going to be cheaper? Bunnings will be cheaper. Why? Because they have scale. They are doing more business, so their margins are smaller, as we've established, smaller margins. Sorry, it's up here. So therefore they can be cheaper. It's just how the world works, you know, whether it's right or wrong, and you feel bad for the mom and pop store, you know, but this is just how it is. It's money on the line. Now, this is, you know, without getting into an accounting advice, we're just speaking very broadly. These savings are tax-free, right? Now, think of it like this. If you made $10,000 gross at work, if you're at the highest income bracket, you could lose almost half of that. So, you know, if you're comparing savings against your wage, it's really, a $10,000 saving here is really like $18,000, because you're getting this money and you don't have to pay tax on it, because you're paying off your owner occupier home, assuming it's your owner occupier home, of course. Now, people are always going to Google Bank of China, and guess what? Their wrap online, it's not great. You're going to find some bad reviews, but you know what? Google any bank in the entire world, they're going to have the exact same consistency in reviews. That's just how it is. People hate banks, and the people are only going to leave reviews when they're having a bad time. These are massive organizations who don't have that level of, like, you know, the reason why this all works is because you're dealing with a massive organization who gives you savings based on scale, but you're dealing with us as a company who are small to medium size, who still care, and we have that client touch. This is why the mixture works. We're like that in between you and the massive conglomerate. That's why the system works. So we're putting, you know, when the server side, you have our service, and we have fantastic reviews. We've got over 500 5-star reviews online. You know, not that I'm boasting or anything, but I'm, you know, pretty proud of that. But that's how much we care about our clients and what we do. So yes, bad rap online, bad reviews. It's the same as every bank. Google 10 banks, you're going to find the same thing. Now, to win a market share with a handicap for stigma, you need to be the best, right? So, you know, I'm not going to say anything, but when you think of Bank of China, what are you thinking, right? You haven't heard of them. You know, these guys probably have to work a little harder than the next guys to break into a new market, where the reputation probably isn't amazing. So, you know, it's common sense. If you're already handicapped before you enter a market, you've got to make up for it. And this is how they're making up for it. This and that. And just think of it like this. You're comfortable using overseas lenders like Citibank, ING, HSBC. The only difference is these guys just market better, you know? These are great banks, especially ING is a fantastic bank. Like, if you don't care about numbers and you want service and just a fantastic experience, go to ING. But if you want to save the most money for you and your family, it's got to be this bank. It's got to be Bank of China at the moment. And the benefit of using us as brokers is we put you with Bank of China. You know, you're going to, you know, it's a 12-month commitment at the least, But then we'll be reviewing you at 12 months. We're going to be reviewing this. And if the deal isn't working for you, we're going to push them to the lowest. We can look at other deals. That is why using us as mortgage brokers makes sense. It's not transactional. It's a relationship we're building together. We want to work with you over 10, 20 years to help you always have the best deal. You can go online and get confused with Google for 3-4 hours, looking up all these things, seeing all these rates that aren't relevant, that are either before interest rate increases or they have catches, and you can go with one bank, and then guess what? 6 months later, a year, you're in the same boat. Come to us, best deal straight away, honesty, relationship. We're here when you call, and we will manage this for you going forward. And if we do that, we make money, you save more money. The banks, they make a little less money. They still make money, they're banks, right? But they make less money. This is the way to handle this whole process. You don't have the time to be investing into research. The bottom line is you need to trust a group of people who know what the hell they're doing, because that is where you will save the most money and you will waste the least amount of time on this. So that's what we're offering. That is the Bank of China. You just need to understand the numbers behind this deal, because they are absolutely significant. I don't want to sound like a broken record, but this is, when you look at the numbers, this suggests it is the best deal for refinancing period in Australian history. Now, it's kind of hard to understand that because rates are higher, poor Bank of China, but just understand this video. If this doesn't work for you, fantastic. If you need that level of service, if you want to walk into a bank, if you want to be best friends with, the guys on the phone overseas, not the deal for you. But if you want to be our best friend and you want the best deal going forward, and you just want to set and forget this deal, you want to refinance, set up your direct debits, have your offset account, pump money in there, and that's it. Then the next time you want to hear about it is in 10 months when we call you to review you. That's who we're looking for. And that is the client that will save the most money, but it's not the client who will have, some of the old school features of a bank, which in my opinion, you don't really need anymore. But of course, that everyone's different. So thanks for listening, guys. Hope that makes sense. Just click one of our links to make an application. Just reply. We'll get in touch with you, understand everything we've said. At the end of the day, it still needs to work. We still have to get your documents, understand that you're qualified. If you're not earning income or you've got no LVR in your home, obviously this isn't going to work. But we need to make sure you're in a position where you can refinance. Once we're certain you are, we put an application in, and there it is. Take care, guys. All the best.